Good afternoon and welcome to Friday's Market Wrap-Up here at Top Gun Options. I'm Wiz, Matthew Buckley. This is an incredible week. It seems like it changes hour by hour. The headlines from Secretary of Defense resigning to U.S. charging more China intelligence officers over hacking to Fed head Williams trying to repair what damage the Fed did this week. Absolutely incredible week. By the way, bottom line up front, we're going lower. We have not seen a bottom yet. There is absolutely zero bullish information or intel or data out there, and there is no bottom in sight here, folks. This market is going lower. Starting with, again, Washington hating the president and trying to keep poking him in the face while he's trying to get a trade deal done with China is this guy and that tool. The Department of Justice going after Chinese intelligence officers. Why are they doing it now? They've been doing this for decades. Now that the president's trying to stick it to them and get us a trade deal, these guys are making the president look bad. This is nothing but it's not even covert. It's an overt attempt to derail, negotiations with China, and they're going to retaliate. So. Interesting that, wait, this didn't happen for 8 years under Obama. China wasn't hacking into everything that isn't nailed down. Well, they were busy, spying on their own people, spying on journalists, and then spying on their presidential opposition. Yeah, so they obviously, China's saying they're baseless allegations and serious damage to relations. I covered on Tuesday of this week. Oh, I can't wait to talk about Facebook. Covered on Tuesday this week, maybe a bearish double vertical on FXI. And look at that, man. Since that thing popped, I said do a bearish double vertical on FXI. And I think as of today, that would have 300, 400% return in a week and a half. And that's going lower, by the way. I would still do a bearish double vertical on FXI. But earlier in the week, the President Xi declared, hey, nobody's going to dictate any reforms to China. You can kiss our rear end. Earlier in the week, I was excoriating the president for what I thought was giving in. The guy had a change of heart, I guess, in like 10 minutes, and then is going to shut this thing down. And he said, just now, get ready for a long shutdown. So here we go. And typical Democrats, well, if you call it a wall, our base won't like it. If you call it like vertical slats, maybe we can support it. Just absolute stupidity going on. It's comical, but now we have a government shutdown. We had a beautiful one-day weekly options trade. That was up about $1,800. If you held this bullish volatility trade that we did Monday until today, you'd be looking at a max profit of $2,700 on $5,200 in risk. So really good weekly options trade. I took off early because I thought he was going to cave. I was wrong. He didn't cave, and he's sticking to his guns. So we might actually look to get a long volatility again right here. Actually, let me move this over a little bit. This is another reason I think FXI is going down. Traders yawn as China pledges significant tax cuts and the PBOC, the People's Bank of China, jumping into the pool and adding liquidity. Every time they've done this, it's a short-term pop and a longer drop. So China announcing that they got to get involved in capitalism again to start saving things is bad. Look at the headlines, man. Trump vows long shutdown over wall funding. Impasse on spending bill comes amid turmoil of Secretary of Defense Mattis's departure. Didn't agree with the president's mainly fulfilling a campaign promise of getting out of the, we did our job. We got rid of ISIS in Syria. We're leaving. We're not the world's cop. Mattis doesn't like the way the president talks to our NATO allies. All right, well, if you don't agree with your boss, leave. Upheaval puts allies on edge. Excuse me. Syrian withdrawal could imperil millions in need of aid. A lot of volatility. I got to be honest with you, market could give two shits about Jim Mattis. Excuse me. All right, moving on. Fed's William. This is the New York Fed chief. So, obviously he's not the Fed head, Jerome Powell, but he came out today like the guy in the white suit walking behind an elephant at the circus and tried to clean up after the Fed head, and it didn't go so well. More or less, he's upbeat, but he says rate plans could change. We're going to be data dependent, blah, 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 blah. Swing and a miss. Investors, Fed officials are out of sync. I told you when this guy spoke, 3 or 4 weeks ago, that the market misinterpreted what he said. the market said he blinked and this and that, and we had a little brief rally, but I told you to sell into that. But I also said people didn't hear him. He didn't change more or less what he said. Yeah, he might have changed a word since October 3rd. But he more or less said, we're doing our job. We're going to keep doing this. So this guy, Williams, today kind of said, you know what, we're maybe going to do a better job of listening to the market, meaning paying attention to that absolute shit show that they caused. They absolutely caused. So I think they're going to try and do a better job with their communication. We can't sit here and wait until the end of January in the next Fed meeting to get more clarity. I think you're going to see more Fed lieutenants like this going out to a microphone to try and clear things up. It's just bad news out there. David Tepper, huge investor, hedge fund heavy, urges to move to cash. Powell told you the Fed put is dead, meaning we're doing our job. Our job is not to save stock markets and capitalism. Our job is inflation and full employment, and we're going to do it. FedEx, huge canary in the coal mine earlier in the week or the middle of the week. Global slowdown, Europe, Asia, they're laying off people, man. FedEx offering early retirement and voluntary separations is a bad thing. FedEx is a canary in the coal mine. The selling is going to continue. Why? Because towards the end of the year, hedge fund lockup periods expire. Rich people can get their money out of hedge funds, and rich people don't like losing money in hedge funds. So the biggest redemptions that we've seen on record. So it is the worst redemptions on record. Add to global markets pain. Earlier in the week, Jeffrey Gunlock, my spirit animal. Hey, I'm pretty sure we're in a bear market and we're going lower. I've been saying this for 2 months, folks. Officially 2 months, and we're going lower. Facebook sucks. Had a great, I put on about a month-long bear call spread on Tuesday. Put on a bear call spread right there, and the stock's down about 15% since we put that on. We also looked at buying some Facebook puts. We are printing money this week on Facebook, and this thing's going lower. This is a bearish double verdict candidate here. I think it's going to the bottom of the Skeltner channel. This will be lucky to be a $100 stock by February. So I bought those, looked at those $100 puts. Remember the days when it was like $218 and people laughed at me? You're an idiot. Get out of Facebook. What are you, nuts? It's a $1,000 stock. It's lucky if it's a $100 stock. It's over with for the technology stocks, folks, just as I predicted. Hopefully you all listened to me and didn't stay in any of those things. Especially you don't want to stay in a company who had "don't be evil" in their code of conduct and then they ditched it. So was Google saying they can be evil now? And we had some really bad macroeconomic data today, folks. At University of Michigan, consumer sentiment, personal income was a miss. Personal spending was a little bit of an uptick. Had some inflation numbers. Things aren't good. Look at this: core durable goods and final GDP. There is a sea of red today. Personal spending, like I said, was a little higher. The consumer sentiment was a beat, but if you dig into it, the outlook is dour. So remember, consumer sentiment was at that time when the survey was taken. I'll bet you if you took it today, with this wealth effect and the market imploding, they ain't feeling too happy about it. So, folks, like I said, we're actually doing some good work in this down market. Dow's now down over 200 points. It was up like 300 points. Sell the rips. How many times have I told you, do not believe any one of these rallies? I said to sell into every one of these rallies and get long SDS calls. We have been absolutely printing money with SDS calls. They're up another 2.5%. SDS is up another 2.5% today. And it is going higher. This is the new normal, folks. Let's take a look at the VIX. I predicted 2-3 weeks ago that the old resting heart rate used to be like 10 or 11. The new resting heart rate is going to be right around 20, which, by the way, since the VIX was founded in, 93, the average VIX since this thing was founded is a 19 or a 20. That's our new resting heart rate on the VIX, guys. And VIX can go higher as well. We're not going to see a bottom until we see washout selling and a massive spike in volatility, and that ain't happened yet. So get ready for a government shutdown. It's going to be a clown car over Christmas, and we're going to have fun trading it. So I got to get going because we have Analyze Your Trade today at 1 o'clock. So I will see my members there. If you aren't a member and you want to kind of take a test flight in what we do here at Top Gun Options, you can head to our homepage and scroll down and pick which type of trader are you. A little bit more conservative, a little bit more aggressive, or you want access to both those type of services. It's called Full Throttle Max. $38, 7-day test flight. Head to go.topgunoptions.com/go flight, and you can join us for a week. And even though it's the holidays and everything like that, and people think it's downtime, it's not. You got a president who's shutting down the government. You're going to see a lot of volatility in this market, and it's going to get is it going to get more interesting if it hasn't been interesting enough right now? Okay, so have a great rest of your day. Happy hunting. Make sure you hedge. I'll see my members at 1 o'clock. Otherwise, I will be back for Monday's market outlook. We'll see you.